In a rare presentation, a senior trader from our proprietary trading desk shares with our new traders surprising advice on risk management that was critical to his success. Hi, I'm Mike Bellafiore, co-founder of SME Capital, a proprietary trading firm located in Midtown Manhattan, and I'm also the author of the trading classic, One Good Trade in the Playbook. In this video, a senior trader shares his advice on risk management to new and developing traders and the keys to success during his trading journey.
So I'm Ryan. I've been here for almost 4 years. I've been here for a while. Trade with Shark, trade low floats. I trade everything pretty much. After a lot of experimenting, trying different strategies, hold times, time frames, long, short, etc., got consistent, found my niche, and really just been scaling it up since then. That probably took me about a year and a half to get to that point. And so Seabri, I've been away on vacation for a few weeks, but Seabri wanted me to talk to you guys about risk management with low floats, and I guess in particular, with everything. Share my thought process on that, getting consistently profitable, and all that good stuff. It's a topic which is obviously vital. If you're going to succeed in this game, your risk management needs to be really in check. And I find a lot of new traders don't place enough emphasis on risk management. They want to just go kind of gung-ho, balls to the walls, make money, and they always think that they always think that when they start, you're going to be the guy that just hits it out the park and is better than everyone else. And so you don't value risk management as much as you should. I thought that, everyone thinks that, and then trading humbles you. And that's when you start to realize that you really need to focus on risk management. So, even on the demo, for example, or when you just go live, you don't want to be trading with full size or 50% of your size or even 20% of your size, because you don't have the 6 months or 1 year track record to back up what you're doing. You don't have that confidence or probability or edge yet. And if you think that you do, then you're going to fail as a trader and you won't be here for longer than a year. And so you need to manage expectations and get that out of your head as soon as possible if you don't want to find yourself in that position. So when you start as a trader, you lose money, you lose less money, you break even, you make a little bit of money, and then you off to the races. So the goal is that by the time you start making money, you don't want to be in a hole. So those 6 months or 1 year before you start making money, you want to be trading super, super small, so that when you finally get consistent and you know what you're good at, you're then able to start making money off the bat, and you don't have to worry about making back $5, $10, $15, $20,000 that you lost while you were experimenting. So that's what I do. That's what I still do today. You shouldn't. Another thing with risk management that people don't think about correctly, in my opinion, is their stop loss. We all have a stop loss. You shouldn't be hitting. Say when you start, your stop loss is $100 or $500 when you go live. You shouldn't be hitting that more than maybe 5 times a year, max, even 3 times a year. Why should I be putting 100% of my risk on one trade or one day if I don't have like a 90% win rate on that particular trade? And those trades only come by 3 times a year. So you should not be stopping out regularly, even on the demo. You should, treat that paper money with respect, and all of your trades should be backed up by statistics that you've collected on TraderView. And I know it all sounds boring and whatnot, but trading is your small business. You guys are all entrepreneurs in that sense, and so every trade you place should not be wishy-washy. It should truly be in the sense that, this is where I'm wrong, this is where I'm putting on my size, this is where I'm going to be adding or taking off, and the reason why I've put on 20% of my daily risk is because the past 6 months this trade's been working. 75% of the time, I make money in it, et cetera, et cetera. Like, you should be able to explain everything that you do.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Once you get that formula, you'll be able to see that things are working. So like a little bit about what I do and how I manage trades. I'll talk about a trade that I made today in AGRX. So an example of risk management. So this is a trade that I didn't know, but I had a feeling I would do nicely in this trade if it's set up as I wanted it to. So I was watching it yesterday, and then after hours, looking at the fundamentals. This is my bread and butter, so I'll look at the filings, which is a whole nother topic that we can go into on another day. But 3 gap ups today, biggest one, pre-market over 3, and I actually started shorting some in the I was super jet lagged, so I was up at 3 a.m. this morning, and at like 5 a.m. I started shorting it, and just being a little bit of a degenerate. But above 3, below 3, gave back a lot of the gap up in the pre-market, which is what I love to see. And on the open, I was short quite a lot. I would have risked a lot more if it went supernova and went up to maybe $3.50, $4, but didn't happen. So there's not a lot of meat on the bone, so I'm not going to risk a lot. But essentially, I was looking for a lower high versus this pre-market 3-ish area, and that's what we got. It's not arbitrary. It's a setup that I've seen a lot on day 3 or 4 gap ups with something similar technicals and fundamentals. So based on everything that I kind of ticked and my checklist, I was looking for a lower high. That's what we got a nice little push. And as soon as we sort of broke the upward, let's go to 1 minute, this little upward trend and got confirmation. So as soon as we broke down here, this is where I sort of just started hammering into it. And I got shares short, and then pretty much just held that. It came off 20 cents, covered a little bit, popped back up, re-shorted what I covered, and then just held. And then we broke lower and covered into this wash quite a lot. So anyways, waited for my setup. I'm not here to talk about this particular trade, but knew what I wanted to see, planned the trade, traded the plan. I know what I'm good at, I know what I'm bad at, I know where I should be putting on risk, and I know where I should be risking, as opposed to just trading 15 things in one day, which I used to do, and I would make money consistently, but not nearly as much as I could. And so I've tweaked a few things, and it's all about being patient, selective, and really knowing what you're good at and what you're not good at, and then having that foundation of risk management to implement everything. It's super important. All of the guys here, like Shark, Swang, Raf, it's easy to just see them like putting on so much size and making a ton of money and thinking that they're, an overnight success, but you haven't seen, the first 5 years of when they were trading, and they focused so strongly on risk management. It was Shark that told me 4 years ago when I joined his team. As soon as I joined his team, I wanted a bunch of size. It's like, give me 5,000, 10,000 shares. He was like, well, are you making money? And I said, no. And he was like, well, you should be trading with 5, 10 shares every day. And I was like, are you crazy? I'm here to make money. He was like, yeah, well, first off, you're here not to lose money and learn how to trade. So stay on 5, 10 shares. And once you've been net profitable for 3 months consistently, then we can bump you up. And it took me a while, but I achieved that, and I could back it up with my results. And then since then, it's just been building on that. And Shark did the same thing, Swang did the same thing. So I guess it's easy to see guys swinging for the fences now and wanting to just jump on board and like be an overnight success. But It's taken everyone that's still here making money. It took them a while to build the right habits and processes. So it's important to realize it's a journey and to work every day on building these habits and speaking to other traders and see what their journey was like and currently is. So that's my spiel on risk management, what I wanted to touch on. So any questions? That's where you guys will get the most value, I think.
I have one question.
What's up?
So, what is something that you would say that like we should do in the beginning to like not let us get in our heads? So if let's say like we're only risking like 30, 40 bucks on a trade, how do we stop ourselves from not kind of feeling mad when we only make like $75, or not then kind of like risking like too much maybe on future trades like during the day because you thought that you should be up more or something?
Well, why would you think that, first of all?
Just, I mean, just like a
So, okay.
nature.
So,
Yes.
I got you. So I understand, I used to think that too. I thought that today. Why I didn't do that? Because I wasn't confident enough to put on more size. Why was I not confident enough? Because in this, first of all, I've been on vacation, so a little bit sloppy, and in this particular setup, I don't have enough stats, whatnot, to back it up. I'm not coming off the back of a few winners in the same type of setup, so it's fair that I didn't make more. And the same should apply to you. If you made $30, $40, $50 in a trade, then there's a reason you only made $30, $40, $50. If you should have made $100 or $200 in the trade, maybe because it's a trade you're not that familiar with, maybe you got a little bit lucky, maybe your sizing was off, you didn't add where you wanted to add, so those are all things that you work on individually. So at this stage, you want to allocate that time and energy to thinking more, I guess, proactively, constructively, positively, in the sense of, well, I should have made more, but why? Always ask yourself, why? Is it because I think I just should have made more because I'm worth more than $30 in a trade? But that's not a good reason. I should have made more because I see that once we broke below VWAP, put in the lower high confirmation, that's where I should have put on double the size. That's great. That's really good work. Or I should have made more because the last 3 trades I had, they all worked in the setup, so I should have naturally sized up and allocated more risk because this trade's, providing me with most of my income at the moment. So it's, that type of thinking. And then that will never go away. You'll never be satisfied with the trade. You'll always want to do better, but you always want to kind of figure out why it is that you feel that way, and then hopefully it's constructive. Yeah.
Yeah. So, question about locates. At what point would you consider a locate too expensive to really be worth or is it a case-by-case basis?
Well, it's case by case. I got screwed on this. Because I was up so early, at like 5 a.m. I was just sitting there and you had to locate it. And so I located a bunch for 6 cents, so $60 for 1,000, and I located a bunch. But I had to because it wasn't available. The way I thought of it was, well, this is at $3 at the time, so I think I can maybe catch 50 cents to a point in this. So am I really going to let 6 cents scare me from getting locates? No, but like if this was a 50-cent stock and I thought I could only catch 15 cents, then I wouldn't pay 6 cents for a locate. But if it's like, 6 cents versus catching 1 point, I'll do that. And then obviously at 8 a.m. or 8:30, it was easy to borrow, so you could short unlimited. You never had to get locates, but I was just a little bit slow and stupid. But so that's how I think about it. How much am I paying versus how much do I think I can make if I'm right?
And are you charting, and is there a correlation between the price of the locates and then the following price action on the chart?
Well, usually if something has a small float and the stock's still in an uptrend and it's going higher and higher, every day the locates will get more expensive because it's just more in demand. That will cause more of a short squeeze, et cetera, et cetera. So there's a direct correlation between the price of a locate and the price of the stock. If it's a low float and it keeps on going up, that's just basic economics 101, supply and demand.
Fair. Yeah. And are you able to see is there any resources, database, anything that's sort where you can see how much the locates were before?
No, you can't, unless you know, unless you chart it yourself. But no, that wouldn't really be useful. But because it changes, you know, changes day by day. In terms of it's kind of arbitrary, that whole locate business, you know.
Do you know why when the market opened, you didn't have to locate this in the previous
This one?
Because I was able to short it, and I was confused why I was able to short this.
It was easy to borrow, so
You know why it changed from?
Well, I know why it changed because we only see that things are easy to borrow around like 7:38 or 8:30 a.m. That's when like it shows up on the level 2 ETB. And I knew that, but I wanted to short it this morning. And also I was like a little bit scared that it wouldn't be available and that the price of locates would go up if this went to like 350 and then there would be no locates. What if it wasn't easy to borrow? So I just took the risk and paid for it. Doesn't really matter now, but yeah, you never really know. Like yesterday, I don't think this was easy to borrow. I think there was just a lot of Convergex shares, and then today it was. So you just never know. It's the Wild West.
So, do you think it'd be more helpful for us? Because you were saying that you had to do like 5 to 10 shares for like 3 months, right? Or however long.
I didn't have to, but I decided to. Other guys in my class were getting stopped out every other day, and, you know.
Just from your experience, do you think it's more beneficial if we approached it a similar way, or if we should just kind of make our like A+ setup, we do 25% of our daily risk, as opposed to doing like 5 to like 20 shares max, like having like a hard stop.
I mean, not even 5. It can be like even less than that. More than that. Whatever you're comfortable with. As long as you just understand that, unless you've had like 3 years, 2 years trading experience and you know how to make money, but I guess you're new, right? And you're here to, you know, you're learning. So I would trade very small and don't put pressure on yourself. And, you know, from now until 6 months down the road, it's just all about learning, getting consistent. And then when you're consistently making money, that's when you start to push your size. And that's when you'll want to push your size, because then you'll know, like, if I don't push my size, I'm doing a disservice, because now I can actually make money trading. Until then, it's gambling. It's figuring out what works, what doesn't work, you know, figuring out a strategy, your personality as a trader, your risk tolerance, and while you're doing that, do it with small size, you know, experiment. So I would definitely do that. You know, Shark did that, Swang did that, Raf started out doing that too. So my philosophy when I joined was I'm not going to do or apply anything I've learned outside of this firm. I'm coming in like a sponge. I'm going to absorb only from the top traders here, and I'm going to just do exactly what they do, what they did do, because they're the guys that have succeeded. So why would I want to do anything else? The people that haven't done that are the people that haven't lasted here, to be 100%, you know, frank and honest with you. So so yeah, I would recommend for sure doing that. Yeah.
And then as a follow-up to that, as the primary thing we're looking for during this phase, then just consistency, since profit isn't really...
Yeah, I think, how long have you been trading for, like at the firm?
A month and a half.
Okay, so it's not even about consistency right now. Right now it's about building the right foundation, basic things, how to read the tape, you know, the difference between small cap, medium cap, large cap stocks, the importance of technicals and fundamentals. You know, it's like learning a new language. It's like learning to walk. You know, you need to crawl first, know the basics, whatever. Get used to falling, get used to getting hurt a little bit. And then once you're familiar with, you know, what moves a stock up or down, which sounds simple, but it's really actually quite complicated, because the psychology in participants is different in every stock. So figuring that out, once you have an idea about an overall idea and comfortability with the foundation of trading and what it really means, then start diving into different setups, long, short, different time frames, swing trade, scalping, momentum. And then 3 months down the line, when you have an idea of, okay, you know, this is where I see myself diving a little bit deeper into trading. For me, it was low float, shorting low floats, fundamentally flawed companies. So that's where I'm going to start getting involved. Then you start charting specific plays and setups, and then you start putting on more size as the results start to show themselves. Then you get consistent. It takes guys 6 months, it takes guys a year and a half, 2 years to get consistent. Nothing wrong with that. It takes time, as long as you can, withstand or sustain that learning curve. Yeah, but I would start off really taking it slow, because it's you don't want to skip any phases. There's really no shortcut to trading. Yeah.
Were you trading before you started here?
No, I had no experience of the US market at all. I just know that I wanted to trade it. So I would invest in South Africa and trade in South Africa a little bit, but it's like completely different. It's
How long did it take for you to be profitable, like just a little bit?
My first year, I didn't lose money, I just didn't make money, I was break even. And then my second year, I made a little bit of money. So second year, I guess after 12 months, I was making money, but not a lot of money, like barely anything. But I was consistent. And then, third year made money, this year made money. And yeah, so first year break even, second year made a little, third made more, this year made more. And it's like I said, I go from losing a little bit, break even, to making money.
If you don't mind me asking a question about not risk management, but low floats in particular, you say that's that's what you trade most frequently.
Yeah.
How often are there, if I'm using the term right, effective warrants on these? And do you use that as your turning point where you say there's a warrant here and that's where I'm looking to get short?
No, but I do that sometimes. With any low float that's up and that I don't know off the top of my head what the deal is with it, I'll pull up the SEC filings, look through their earnings, or look through shelves or prospectuses that were filed. I'll look to see if they have an ATM, which is an at-the-market offering. I'll look to see if they have warrants. If they have warrants and the PR was wishy-washy, then just trading 50 cents below the warrants, then I know that if it pops up to the warrants, it's probably or likely to fade from there. But I also know that everyone else with access to the internet, and a brokerage account is looking at the same thing. So, they all want to short it there too. So I'm also always thinking about, well, if we get above and hold above, and I know that E-Trade and this one and that one, it's easy to borrow, and Tom, Dick and Harry are shorting it, then I'm going to probably look to get long, and it's probably going to squeeze. So I use that information, but I use it with a pinch of salt. Something like this I know is toxic. I know they have no revenue. It's up 40 cents, 50 cents to $2.50, $3. It was a matter of time until it got a pullback, and then I was looking for a particular setup, which started in the pre-market, lower high, trap longs, trap bulls, and took out that level, which is perfect. And then it was just straight down. But yeah, I look at that. Have you guys gotten clued up a little bit on filings and dilution, different forms of dilution?
I'm working on some low floats. I did on CHFS, CANF in the past two weeks. I've been working on those. They pop up and then maybe they hit the warrant or something.
Interesting.
I've been working on that.
Has that been working?
Yeah, I was able to get, I think I traded 5 of them, but 3 of them worked out pretty good.
Okay.
Yeah.
Nice. So yeah, but that's maybe something interesting to backtest if you're able to backtest that.
If I can ask one more question, I'm sorry, but what grabs your attention? What comes across your desk first? You can see that after you find a company and then you're looking into it. But are you screening for something in particular, certain financial metrics to find these companies that aren't?
Not to find them. So like I have filters that spit out low floats, OTC companies that are up a lot. Once they're up a lot, I start off with the basics, looking at the float size, short interest, speaking to a few guys, around that are trading with retail accounts, see what access to locates that they have. So just an overall picture of potential to squeeze, et cetera, et cetera. And then I'll look at the filings and kind of, I guess, everyone places importance on their own metrics and their own research. So I've I have my own little checklist that I look for when I look for low floats, what I think is important. But that won't tell me how to trade the stock. That'll just give me, if I think it's a short based on X, Y, Z and what I saw in their filings and dilution or possible dilution, that will simply give me the confidence to short more size when the setup is there. It won't mean that I press the short button immediately. I'll, if it's the front side, I'll be looking for areas to get long. When it breaks the 2-day VWAP or it breaks the uptrend, puts in a lower high, then I'll short, and I'll short a lot more size if there's dilution or warrants or an ATM, etc. So I just use research to complement or give me extra confidence with sizing on both sides. Yeah. Any questions, guys?
When you're trying to figure out like what you're best at and you're kind of like looking through your stats, would you say like the most important thing is like the type of stock that it is or like the time of day?
Yeah, that's important. Time of day, definitely important. Type of stock, price of stock, type of stock, float size, the beta, R vol. Are you good at trading stocks that are in play, that are mega in play, like low floats that have 300 to 2,000 R vols? I am typically. So yeah, everything here. Time of day, type of stock, particular setup, long, short, hold time, 30 seconds, 1 minute, 5 hours, 2 days. Yeah, all of the above.
Okay, so there's not really anything that like stands out as more important than the other.
No, for me it was pretty straightforward. After like 6 months, I looked at all my stats. I was trading everything with small size to get exposure to everything and figure out what I liked. And I saw that I was losing money trading large caps that are in play, earnings, etc. But I was making money consistently trading low floats. At the time I didn't know because I was trading so much, and it was after then I was like, well, I really hate losing money and I hate being red $5, $10 a day. So I'm going to actually just cut out everything that I've lost money on. So large caps, long, short, the 10, 15 setups I was trading. And I'm going to double my size from 10 shares to 30 shares or, triple my size in low floats. And let's see what happens after a week. And then I had a consistent week. I was like, I may be onto something. Let's spend some more time diving into these particular setups. Where did I make the most money that week? And then I even refined it. I was like, well, I was doing better trading the low floats with higher R vol, so I'm going to put more size and risk on those ones. Keep the size on the lower R vol, higher price low floats at the same, and let's see what happens after a month. After a month, I was profitable, and then I continued refining it. And then, after a year, my goal was to then earn a living from trading low floats, and I did. And then I was like, well, now let's apply that to OTC stocks, which is a whole nother ball game. Trading these, scam pump and dump OTC names. People think like, oh, that's shitty, blah blah blah. These like 10-cent stocks that go to $5. You have 4.5 points of downside if you trade them. No one else is trading them. If you can find them, you can do the research. A lot of money to be made there. So I focused on that, and 3 OTC trades last year was like 50% of my income last year because there was just so much. You're talking about 10 points in one day, straight down, not even an uptick. A lot of opportunity. So I focused a lot of attention there. And then I started applying that thought process to just like how you build different streams as you gain more experience, is what I'm trying to explain, to the Beyond Meats, the Rokus, IPOs, so large caps that I believe are shorts or that are backside to, blown out moves. And I also get long. I get long a lot of stuff, but it all started with perfecting one thing and then taking that skill and applying it to OTCs and then large caps, different setups within large caps, and then branching out to getting long a bunch of different stuff now too, and collaborating with traders.
Would you say most of the better setups on these low flows are on the short side?
No.
Like instead of chasing the big long?
I think so, but definitely not the case. I think long, short, setups are stocks go down a lot faster than they go up. So I like that. I like to short because I think I'm very cynical in my nature with trading. I'm a very cynical trader. So I gravitate towards that. But the guys that make a lot of money getting long these, you can control your risk really, really well. And the setups are super clean. I mean, just this yesterday into the close and after hours, even though the market closed and it's after hours, this is still a beautiful trade. And I know a couple of guys that got long on this break and then held into the close and caught this move because they realized everyone short had to cover. They were going to get squeezed, and after hours it's very illiquid, so they took advantage of that, and it's a beautiful trade. So there's a lot of opportunity. Even today, I thought about getting long on this down move. Instead, I didn't. I just got flat and whatever. But I thought about buying a bunch down here because you could clearly see that it was a bit of a bottoming action. Then over here, I thought about getting long again, V bottom, a little bit of a base, higher low, pushed higher, but I just didn't want to. But there's a lot of opportunity because they're so volatile. So if you can just trade and not be biased, you can make a lot of money on both sides with low floats. Again, it went from $3 to $2. People are like, oh, it's 1 point, but it's actually 33% of the stock. What large cap are you going to get a 33%? Are you going to be able to catch 33% of in 2 hours, 3 hours? A lot of opportunity trading these. They may not be sexy, they may not be Facebook or Amazon or Apple, but if you can manage your risk well, build consistency, then a lot of money to be made in these names because the risk to return is really amazing.
When they go that much size on these, how do they go about gauging the volume, right? Because the volume could shred up or dry up, and then they have 200,000 shares with nobody to sell it to.
You can always get out. They'll always, it's just a matter of at what price and how much are you going to get slipped.
Yeah.
But if
But is there something they're watching to? Because I know these low floats, they'll cycle a lot and then all of a sudden just dry up.
Sure, you're watching the overall volume and how the stock has traded the past couple of days, the amount of volume that it's done. This has been thick. Yesterday it did 33 million. Today at that time of day it was on track to do the same amount. And so, that was just kind of what they thought. And then in terms of he was thinking in terms of risk reward. So, the stock's at 280. I believe it's failed now. So in this area, we're seeing against sort of 290, 295-ish worst case. That's how you're thinking about it, risk return, and then the overall picture of how much volume has the stock been trading. Would I be able to get out within that?
Would someone put a hard stop if they were short that many shares, or would they more so have mental stops?
It was a mental stop, yeah.
But would there be at any point? Would he put in his hard stop at that pre-market high, and then just if he saw it break 290, he would just start hitting out?
Yeah, he may be a worst case scenario stop, but I know that he didn't have a stop. I didn't have a stop either. I had a mental stop. If it went against me, I would have just started doing maybe 3 clips. If you're watching the tape, there were big orders going on off all the time, 10, 15, 20,000 shares, and it wasn't moving it really at all.
How do you properly short that much shares and without you naturally causing the stock to fall more than it should?
So that was here, I believe. A lot of this size, so it did 450,000 shares here. And a lot of other people did, but if you think of it that way, we were 25% of the volume. And the stock did, with momentum, it went from 288 to 280, so it only went down 8 cents. But it also ran a bunch of stops, which is probably the other 300,000 shares because people were getting long thinking a squeeze. And then again, when it dropped down here from 281 to 274, he basically hit shares in here. So
did he wait for that to start, or was this guy?
So say 280 has been holding. As soon as that bid decrements at 280 and 279 hits, it's just 25, 25, 25, 25 hitting the bid. yeah. I don't think he offered in once. It was just hitting the bid. I did that too. I didn't offer, until this when I added back what I covered down here. But this whole thing is just hitting the bid because, like, screw it. If you want in, you want in. You just got to hit it. But you're able to do that because you know where you're wrong, you know where the stock can go, and you know that you have amazing risk reward. And yeah, I really hope tomorrow this pops up and fails around 260-ish, because then it could be a really nice trade. SSR is on, which makes it's going to be a little bit shitty tomorrow, but there's so much downside in this. Also a lot of upside if it traps long, so it's important to keep that in the back of your mind. But I think 260 and then back in that range, sort of 235, 240-ish. Take out that tomorrow. This will test $2 again. So if it sets up, I'll be looking to put on the same size, if not more, because now I have a little bit of profit from today to play with tomorrow.
So now it's your turn. Which effective trading technique from this video will you try next? Is it trading very small until you are profitable, or to ask where you're making money and add risk on those setups? Let us know by leaving a comment below right now.